an interesting thing about Kochi Shipyard, we spoke about Mazgaon docks having dry dock capacity of about 30 to 50,000 tons. Kochi Shipyard has a capacity of 1 lakh or 100,000.
Massive ships.
Massive. 100,000 to 125,000 tons. And this becomes extremely important when you realize what exactly it is that they produce. So India's only indigenously developed carrier, INS Vikrant. Do you want to take a wild guess where it was produced?
It was produced by Cochin Shipyard.
It was produced by Cochin Shipyard. So Cochin Shipyard is one of the few shipyards in the world that has the capacity to produce aircraft carriers. Now, again, just a little bit more context. So the INS Vikrant is a displacement of 40,000 tons. So you measure a ship by how much water it displaces, because that's how much of it's under the water, that's how much it can carry, that's how much space there is for aircrafts to take off, so on and so forth. So INS Vikrant has a displacement of 40,000 tons. The Fujian, which is China's flagship carrier, has a displacement of 80,000 tons.
Double the size.
Double the size. And the US, which is the Gerald R. Ford carrier, has a displacement of 100,000 tons.
Wow, massive carriers.
Absolutely huge. So we have a long way to go, and Kochi Shipyard should be able to service that with its capacity.
That's why I think we'll be seeing larger and larger carriers as we go along. And that's where Kochi Shipyard, which is one of its kind, will come into play. And they have got the resources, I think. It's just that these are long gestation projects. They're very expensive as well, so you really time their the placing of the orders, and then execution will take years, if not a decade, to build it. But I think it's going to happen at some point of time, where they will get a massive order for a large aircraft carrier, and that whole process will start. The billing will start, and it should start to get reflected in the performance of the company.
Yeah. So again, just for some context, because we continuously anchor India's military to that of China's, India has at this point 2 functional aircraft carriers. China has 3. The US has, I think, 7 or 8, if I'm not mistaken. But more worryingly, China is hoping to get up to 7 or 8 by 2030. So there is a lot of demand, particularly in terms of aircraft carriers, that we will need to have fulfilled. And I think that's reflected in Kochi Shipyard's order book, which has been growing at 18% compounded over the last 5 years.
That's what I think, and these are all big ticket items. And as I said, I think order books is not the issue for India's naval shipyards. It's what they can actually deliver and how quickly they can deliver. Because everything is not in their control. A lot of it is dependent on external supplies. And as and when they can construct these ships and get the equipment in and install it and start to test it, that's when the billing will start. So if they can deliver these ships, these massive carriers earlier, orders will keep on flowing to them.
Yeah, I think maybe they've had some delivery problems here, or maybe it's just a lull after delivering a big aircraft carrier, because their revenues have only grown at 4.4% over the last 5 years, or rather they've de-grown at 4.4% over the last 5 years. And profit has even more worryingly fallen by 8.6% over the last 5 years. So it's maybe not in a great financial position, but you can't argue the order book, you can't argue the capacity. And
so the earning visibility is there. I think if you look at the order book position of Kochi Shipyard, it is at 21,000 crores as of 31st March. And its revenue for March quarter was 2,300 crores, almost 9 times its revenues is its order book position. So you can imagine that for 9 years they can keep on generating that 2,000 crores type of revenue without accounting for the fact that they may get new orders.
Of course.
So from that point of view, I think it's sitting on I would say, very strong order book position.
Yeah. I mean, what's funny for me is that both Mazgaon Docks and Cochin Shipyard, they're only valued at 24 PE, despite, running up very heavily in recent years. And that's not something I quite understand, because a navy is, if anything, more important than an air force for a modern military. And the order book position for these guys, or the future orders for these guys, should grow at a really nice clip over the next 10-12 years, but it doesn't seem like the market is valuing them at that level. And I can't for the love of me figure out why they're doing that.
The reason for that is globally shipbuilding companies are not valued at very high price to earnings multiple. Even shipping companies are traded at low single-digit PE multiples. So from that point of view, I think investors have this perspective that they cannot pay a high price to earnings multiple for a naval shipyard. And I think the reason also is clear, that when we talk about Bharat Electronics and HAL and some of the other Indian defense contractors. It's all about technology.
Mhm.
It's all about being abreast with whatever is happening in the world, and more investments are going into figuring out what will be the next big wave when it comes to technology spending. But when it comes to shipyard, uh, basically a shipyard will build the ship.
Yeah.
But all the equipment inside, the electronics, the electricals which go into it, the weaponry system, that's all outsourced.
So I'm not 100% sure that's entirely true, and I'll provide some numbers
Okay.
to offer that to sort of offset that. So 62% of the Indian Navy's equipment is indigenously sourced, but for INS Vikrant in particular, which is I guess the pinnacle of shipbuilding in India, 76% of all equipment was indigenously produced.
That's
So
right. It may be indigenously produced, but how much of it is done by the shipyard themselves?
mhm.
That's the point I'm trying to make. Is that largely they construct the ship, but all the equipment and the systems and the electronics which go into it is outsourced. It is
So
supplied by
not
others.
substantial value add
No, no,
then.
it's a great deal of value add, but it's not in the same level of a Bharat Electronics or HAL,
Right.
which is in a different league. So
Okay.
we're just trying to discuss why the valuation ratios are lower for shipbuilders. Also, if you look at the return on equity or return on capital employed, that is also lower for shipyards
Mhm.
because it's a capital intensive business.
Yeah.
So one needs to keep that in mind as well. And the return on investment, the return on capital employed does have a direct impact on the price to earnings multiple which you pay for a company.
Right. This podcast is produced by Elixir Equities Pvt, a SEBI registered research analyst. Registration number INA 00004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risks. We strongly advise all investors to read all related documents carefully before investing.